Hi everyone, this is the Focus Spender, and today I'm going to be talking to you about where to start when you are ready to start investing. But first, if you're new to my channel, I would love for you to subscribe. My channel is all about getting out of debt, staying out of debt, organizing your finances, and increasing your net worth. And if you'd like to find me on social media, you can find me at Focus Spender on Instagram, Facebook, and Twitter. Now let's get started. Okay, so I want to give you some real talk today. A lot of times I get DMs in my Instagram account, I get DMs on Facebook, or comments on my YouTube page. And sometimes I get a little bit worried about the person who is contacting me, because the things that they're telling me lets me know that they are utterly clueless when it comes to investing and might have a misconception that when you invest money that there's some type of guaranteed rate of return. There's some type of way you can guarantee that if you put in $500, you're going to get $1,000 back. You're going to get $2,000 back. A lot of times people will say, I've never invested before. I'm clueless about investing. And I don't know where to begin. How do I pick stocks on Robinhood? What are the best stocks to pick? And I'm thinking, whoa. There's a whole lot of information that you need to know first before you go ahead and just jump in head first into investing. And the first thing that I want everyone to understand is that there's no guarantees when it comes to investing. If someone tells you that if you put money in this stock, you're guaranteed to flip your money, you should walk away. And I'm not even being funny. You should walk away, because unless they're doing some type of insider trading, which is illegal, there's no way that they're going to know for a fact that that stock is going to double in price. It's just not possible. There are definitely people that can help you pick stocks that, should do well, based off of a lot of research. So I'm not going to knock anyone that's teaching you how to research so that you can make an informed decision about the stock purchases that you're going to buy. But when you see someone saying that they can guarantee you, walk, run, just get away really fast. So today I'm just going to be talking to you quickly about where you can start when you're ready to start investing. Because the purpose of investing, in my opinion, is so that you are setting yourself up in the long run. You want to think of this as a marathon and not a sprint. And that if you are doing the things that you're doing right now, even if it's building slowly, by the time you hit 10, 15, 20 years, your accounts are really going to grow to a massive size, so that when you are in your old age and you're ready to retire, you have this huge nest egg. So the first place that I want you to start when you're ready to invest is your job. Yes, your job. So if your job offers a 401k program or a 403b program, definitely start there, especially if they're going to offer matching funds. I don't care if it's 2% on your investment or 1% or 3%, whatever it is, you should at very least invest up to the match amount, because that is a guaranteed 100% rate of return on your money. That's the only thing that can be guaranteed. So if your, let's give some real numbers. If your salary is $30,000 a year, and your job says we will match 10%, which is rare, but actually I have seen it happen. But they'll say we'll match up to 10% of your contribution. That means that they will match up to $3,000. So if you invest $3,000, which is 10% of your salary, they'll match you dollar for dollar. That is 100% of what you put in. If you put in $6,000 and they said we'll do a 10% match, they'll still only match you $3,000, because that's 10% of your salary. So like I said, that is a guaranteed 100% rate of return, and you want to start there. Now, thinking a little bit deeper into your job's retirement plan, if they allow you to do post-tax investing, you might want to consider investing even more with them. But you really have to start looking at your job's plan to see what are the fees on their retirement plan. You also want to see who is the company that they're using to make sure that you are investing in quality funds. But at the minimum, definitely do up to the match. So once you've exhausted that option of working with your job, the next place you should look when you're ready to invest is into a IRA, which is an individual retirement account. You can do a traditional or you can do a Roth IRA. I definitely suggest a Roth IRA, and the difference is that the traditional is pre-tax money, so there is a benefit for doing that in the short term, as in right now. You get to write that money off on your taxes. You get to use money that has not been taxed. Or you can do the Roth IRA, which is post-tax money. So there is no tax write-off. You don't get the benefit now, but you do get that benefit in the long run. So when you retire and you start drawing down on that money, you never have to pay taxes on that money, no matter how large that money grows. But the max you can do, I believe, this year, I think is $6,000. So there is a limit to how much you can invest with a Roth IRA. And within a Roth IRA, which is very important, just because you open a Roth IRA, you have to still select how you're going to invest your money. You can invest in stocks, you can invest in mutual funds, you can invest in ETFs within your Roth IRA or your traditional IRA, and the money will not be taxed at year end. So if you're getting dividends from the companies that are in your Roth IRA, because that money is going to grow without any tax penalty, you're not going to be getting any capital gains tax at the end of the year on anything that you earn. Now, the last place, and obviously there are so many ways you can invest your money, so many ways you can invest, but I'm talking about like stocks and bonds. The last place you should start when you're ready to invest, especially if you're a new investor, is into a regular taxable account. So once you have your 401k, 403b set up, once you have your traditional Roth IRAs set up, then if you still have money left over, that's when you should start looking at opening up a taxable account. If you go ahead and purchase an ETF on your own, if you go ahead and purchase stocks on your own, if you go ahead and purchase a mutual fund on your own in an investment account, that is a taxable account. If you receive dividends throughout the year in your investments, those dividends have to be reported as income, and then you will get tax on it. So the money is not growing tax-free, but when your stocks are increasing in value, you're not getting tax on that money. It's only if you are receiving dividends from those investments or if you make a sale on a transaction. So let's say you bought, 50 shares of Nike because you're wealthy. You bought 50 shares of Nike and then you sell it for a profit, then you are going to be taxed on that money. If you sell it at a loss, which you don't want to do, but if you sell it at a loss, you can write that off and help reduce your taxes. If you do nothing and it continues to grow in price, nothing will happen. The only thing that you'll get taxed on is your dividends that you receive throughout the year. If that company offers dividends, you can open a taxable account just about anywhere you open your Roth IRA. You can open it with Robinhood, you can open it with M1 Finance, E-Trade, Fidelity, tons of different places that I'm not going to go through right now. So there's definitely a lot of options to open taxable accounts, but I really think that should be the last thing that you do if you are really trying to build a cohesive portfolio in your investments. You want to do the things that are going to give you some type of tax benefits first before you go ahead and open that taxable account. If you have any questions, be sure to leave them below. I hope you like this video. Make sure you click like and subscribe, and I'll see you next time. Thanks. Bye-bye.